Let's start with Michael. Michael, welcome back to the show. How have you been?
Good. I've been a long time.
Yep. Okay. I missed you too. Now, you've made what could be, from my understanding, your greatest discovery ever. Tell us about that.
Well, as you know, I'm looking for anomalies in the market on the short side and the long side. And what I do is I do research on when I find extraordinary things going on in the private markets or the public markets. I do research on them. And what happened was that this has to do with cryptocurrencies, what I've discovered. Okay. And so just to give you a preface, crypto, as you know, started out, the first crypto transaction was a Bitcoin purchase of 2 pizzas. Somebody spent 10,000 Bitcoins to buy 2 pizzas in Jacksonville, Florida back in 2010. And since then, Bitcoin has taken off. The value of all cryptocurrencies, 2017 was the year for cryptocurrencies. The value of all cryptos went from 180 million to 600 billion. Okay, from the start of 2017 to the end of 2017. Okay, mm-hmm. Actually, I'm wrong. It's 18 billion, not 880 million. 18 billion to 600 billion. That's an unbelievable growth. That's fantastic growth. Okay,
right.
Over that period of time. So by the end of 2017, Coinbase, which is the largest crypto exchange in the United States, had more customers than Schwab, the U.S.'s largest independent broker in the United States, and they did this all in a year. And they were growing their new account base at the end of 2017 at 2.5% a day. Was how fast the new accounts were growing. Okay,
mm-hmm.
There's by the end of 17, there's over 1,300 cryptocurrencies. And finally, at the end of 17, there was over 200 crypto exchanges in the United States, well, in the world, not the United States, in the world. So what happened? So all of a sudden, everything peaked. Bitcoin peaked at about $20,000 a coin,
right,
in December, making those pizzas at that point we're worth about $200 million. Can you believe that, Mike?
Yeah, that's
somebody paid $200 million. I wish they had those. They wish they had those 10,000 coins back.
That's right.
And even at its low, even that where it is right now, the coins are worth $60 million. Okay, the 10,000 coins,
right, that
purchased those 2 pizzas. So what did happen? Well, what happened is, like with all good things come to an end, that was what I call crypto's Wild West. And it was the unregulated, there was no law and order, there was nothing. So what happened is Vietnam, in January of this year, announced that they were banning cryptocurrency exchanges because their citizens have been defrauded by $650 million. So it went on and on and on, and now all of the governments, the SEC came in and started banning exchanges, crypto exchanges, and other governments are banning crypto exchanges. And all the governments on the planet, their goal this year is to regulate these cryptocurrencies. And the cryptocurrency community, they would probably disagree with me right now because they don't understand the issues here. But this is in desperate need of regulation, the cryptocurrency industry. This is like,
but Mike, let me ask you a question here. Why did we have such a strong pullback from 20,000 to between 6,000 and 7,000 now? What was going on? Was everybody deciding that they're going to invest in their own cryptocurrency and get out of Bitcoin, or was it really the regulators saying, "Okay, that's enough fun for now. We're in the game and we need it to level off because we're going to use it for something"?
Well, what happened is all the cryptocurrency change, because they're scared of the SEC or whatever, mm-hmm. Cryptocurrency exchanges started closing. They were closed by governments. They started voluntarily closing on their own here in the United States. And with all these closings, now you have, 30, 40 million people who have cryptocurrencies, and all of them have less exchanges to trade on.
Mm-hmm.
And there's none of them that are regulated, that were operating under SEC rules and regulations of the 200 plus crypto exchanges. So I'll give you an example, a good anomaly. In 1849, when they hit gold in California, 15% of the U.S. population went to California to pan for gold. Now, when they got there, what did they have? Who made all the money? It's the companies that provided the picks and shovels, and also Levi Strauss, because they had the genes for the extremities.
Right.
Now, imagine that happening, 15% of the population going to California, and there not being any infrastructure, no picks, no shovels, no genes. You had to have your bowl and a fork to pan for gold after you got to California. That's where crypto went. So that's why this is my biggest ever discovery. And if you can find those companies that are emerging to provide the regulated infrastructure that the governments want, those are all massive. They're massive home runs. Every single one of them is massive home run.
I get it. It makes perfect sense. Can you throw a couple of names out for the listening audience that that they could do some homework, or is there some place on your website that they can go and look these up?
Well, the where they are, and here's what we've done, because I put my information, and I'm a contributor on WFN1. We have a site called trophyinvesting.com that has memberships for finding companies that are going to multiply in value, mostly private companies that are going to multiply in value, startups. And we've got 2 of them now listed on that site, trophyinvesting.com. And your viewers can use, when they go in and they hit register, when it asks for their information, they can use the promo code WFN1 and enter that promo code, and they'll get a 60-day free trial. That will give them, they get the information, the reports on the industry, everything for free, and they could even make the investments.
What's a normal subscription
cost? Both of them are
cost?
available right now. You can invest in both. Right off that site, you can make the investment.
What's a normal subscription cost?
The subscription after the 60 days is over, it's $99 a month.
Okay, let's get that out there. Got to tell the audience that. All right, so that makes perfect sense about the companies providing the regulation that they're going to have for the regulators. I get that. Is there any price range? We got about a minute left. Any price range that the audience can think about when you're looking at, let's say, investing in one of these cryptocurrencies you just spoke about?
Well, I think that the cryptocurrencies are going to, until these regulated infrastructure providers come on, the industry is going to be very, very illiquid. The currency is going to be very illiquid, because there's literally more exchanges. There's 2 South Korean exchanges that lost over 30 million each by being hacked during the month of June. So it's very, very risky. I would not invest in cryptos until these infrastructure plays are in place. So you've got an SEC approved platform to invest.
Got it. Real quick, website for everybody to check out these companies, and then we got to go.
Trophyinvesting.com.
Got it.
TROPHY investing.com.
Michael, thanks for being a guest. We'll talk to you soon.
Okay, thanks. Bye-bye.
You're welcome. Michael Markowski. He is the CEO and founder of Dynasty Wealth. We're going to take a break. You've been listening to CEO Money with Michael Yorba.